Scott Wapner, front and center at this hour, reaching resistance. The S&P pulling back from record highs and pretty much flat over the last 2 months. Is this just a pause before the next push higher, or is this rally momentum stalling? Joining me for the hour to discuss that and much, much more. We got Joe Terranova, Kerry Firestone, Shannon Sakosha, and Steve Weiss. A quick check on the markets before we begin taking a look. You're seeing the major indexes and the Russell down there at session lows right now. The S&P pulling back more than 1%, the NASDAQ down more than 1.5%, the Dow down more than 300 points. Coming over to you, Joe, to start things off. It's hard to answer that question just based on one day. Sure. We did have the markets hit a record high just earlier this week. But are we seeing signs of a rally that wants to slow down and stall? Or are we just simply seeing some growing pains as we see this broadening?
I think we're seeing the consequence of elevated volatility. And it's been that way since the beginning of the year. You use the word momentum. Momentum is trying to find what will be the next trend establishing itself. Interestingly enough, it looks like Bitcoin and cryptocurrencies is where that next trend ultimately is going to be. Momentum remains entrenched in precious metals, gold, silver. That's not a recommendation to go buy them because I sold out of the GLD and I think they're extended. Small caps, the Russell, you still have momentum in place there as well, and some of the semis, and certainly energy and materials. But it's the type of volatility that's suggestive of capital not really leaving markets, but more reallocating to different places. And it feels a little bit uncomfortable because it's moving out of the familiar winners in 2025, the Mag 7, some of the financial names, and it's going to places like materials and energy where we were underallocated last year. So I think more than anything else, it's elevated volatility, and I think we all expected that.
Yeah, looking at the VIX right now, the VIX at almost 18, so a bit elevated from recent days. Not historically elevated, but certainly from recent days. Markets at their session lows right now as we get big bank earnings. Volatility ticking up a bit. Obviously, there's a lot of global issues going on, also some domestic issues, among them the investigation into Jay Powell.
Yeah, so there are so many different points to worry about in the market where I think there's reason for concern. So imagine yourself, here's the backdrop, imagine yourself in a rowboat, say, and there are 4 people. You're all standing, you all go to the right side of the boat, and it gets a little rocky, it gets a little unstable, and you're wondering, is it going to tip over, or is it going to right itself and smooth sailing? So I think we're on the right side of the boat. Everybody's bullish. So many are saying, and I'm not picking on them because they may be right, this is the best environment ever to invest. You've got an accommodative Fed, you've got renewed growth in the economy, and I'd say I'm not so sure. So what I see is that investors are finally waking up to the fact that Washington's not that helpful. They're essentially attacking capitalism by mandating or trying to mandate that companies, oil companies, invest in Venezuela, despite the profitability or the risk of those assets, is attacking capitalism. By the mini-me Trump going after home builders and saying, I don't want you to do buybacks, saying, I don't want you to do buybacks in defense. What's going to be next? What industry next? And then you take the war on every front where the administration came in on the promise that we're going to mind our own business, let others mind their own business. You've got Iran, which will drive oil prices up. You've got Venezuela. You've got who knows what, and the ongoing battle with China. So there's enough there to worry about. So the cross currents are that you've got yields which are down today, a flight to safety, but they really held steady because you don't know whether there's going to be increased inflation when you put a puppet in that's running the Fed, right? Or if it's going to be declining inflation still because of what we just saw in the numbers. So the bottom line for me is not putting any new money in the market. My positioning is the same as it's been. I'll keep it there, but I do think every day about raising more cash.
You know, it's funny you say that. Goldman out with a note. First off, saying they're giving a nod to the increase in volatility. And Joe and everyone else, I want to bounce this off you. But since you hit us with the rowboat metaphor, he has a metaphor. There are times to go for the gas, there are times to go for the brake, and there are times to do neither. My instinct is the right judgment over the next few months is door number 3, which is to do neither. Do you see it that way? Is now the time to stand pat? And also, I'm not sure if that decline in yields was a flight to safety. We got 2 inflation reports that were better than expected as well. I mean, wouldn't that lead yields to go down as well?
No, it would. But my point is that over the last few months, because of the decision on the Fed. Look, we know who every.
But you're saying door number 3. You're gonna hold.
Right.
Pat
I'm holding steady. Now, also on the banks, we saw them sell off. That's not a reason for today. We see that every quarter.
Okay.
Right. And I wouldn't be surprised to see the market sell off even after a good quarter, which is expected, because we've seen that periodically. So look past those windows, and I'm at door number 3.
All right, Joe, you were nodding. Are you at door number 3 too? Just kind of standing pat, at least for the near term.
Volatility is hard, and it's a different environment. It's going to be a different environment than we've seen in 24 and 25. It just is. At the end of the year, I did do some selling. I haven't done very much in the market personally, other than I bought Merck, and yesterday I bought the OIH. So it's energy, it's healthcare. Traded some futures around, but I kind of agree with that. You're kind of right now a little bit on your heels, looking for some tactical opportunities if ultimately you can find them. I said before, it looks in the near term like Bitcoin's probably developing into the strongest near-term trend. That's not my thing. I'm not a cryptocurrency trader or an investor, so I'm going to let that play out on its own. But I don't see very much in front of me right now that gets you excited about a tactical opportunity.
There's one more point I'd make. Sorry, Carrie, let me just drop this quick one. Is that valuations are so high, you'll need a meaningful drop. And that's maybe 10% in the market before you start coming in and saying that valuations have been de-risked.
Fortinet, CrowdStrike, Palantir, other software names like ServiceNow, Workday, these stocks don't look good at all. And you mentioned where technology on the year is. Think, everyone, if you would, for a moment, where would technology be without the strong performance we've had so far from semiconductors? And there is a clear trade that is going on in the speculative hedge fund community where they are long semiconductors and they are short software. And a lot of people, myself included, talked about coming into the year. Maybe you had some mean reversion in that trade. You just have not seen that at all. And that's indicative of an environment for software that's really troubling.
All right. Shannon, come over to you. Just your view on the cyber trade. Cyber even traded lower than broader technology as over the last 2 months. And then today we got a report that Chinese firms are telling, Beijing's telling Chinese firms to stop buying U.S. and Israeli cybersecurity stocks. That seems to be another thing that's weighing on the sector. But just your view on cyber overall.
I think longer-term trends on cyber continue to be very supportive as we move through. Again, as software companies potentially lose control of that user interface, right? That shifts to AI. Businesses are going to be increasingly concerned about what that means in terms of security. I think anything that relates to China, U.S., potential trade issues, that's always going to weigh on names on any given day. I think longer-term, however, the need for cyber is becoming even more pronounced. And I would argue that in a geopolitical climate such as the one we're living in right now, cyber attack becomes even more imperative to prevent, given the fact that it can be so disruptive for businesses. So I'd say there's, kind of put aside kind of China, U.S., that's always going to weigh on names whenever they're, in the crossfire. I would say longer term, however, the need for cyber as part of that enterprise stack is not going to be eliminated. And so perhaps we're just getting caught up in that software versus semi debate.
I just want to follow up a little bit on what Shannon's saying here. It's important to always think about positioning. Everything that Shannon is stating, that has been the thesis. We've all talked about it. We all speak bullishly about the need for cyber and cyber spending over the coming years. But now think about positioning and how positioning affects markets. And it's very clear that positioning is long and somewhat trapped in that sense because these stocks are just not responding to the bullish thesis that we've all communicated over the last 18 months. And you have to factor that into your investment decision. So if you are thinking to stepping into that trade now, let it unwind a little bit. Let some of that bullishness, let it be neutralized before you go take position.
Well, I think part of that issue is that on cyber, and the reason I haven't been in it, I was in it a couple of years ago, valuations still are not attractive. The valuations on these stocks are egregious. So you've seen some disappointments in various quarters, and that just, I think, puts people back on their heels and saying, look, they're unreasonably valued. Why should I risk it? We have underspent China by maybe a multiple of 100 times in cyber. It's ludicrous, and we haven't woken up to that. If you look at the DoD budget on cyber spending, it's really nothing relative to the entire budget and the importance of it. So we do have to spend a lot more. The question is, where are you going to do it? Wait for the stocks to come lower?
I think we're saying the same thing.
Yes, absolutely.
Because, what's happened, too, is people have just ignored the valuation and basically have said, no, okay, cybersecurity, we want to invest thematically around that. And you have to factor that into your decision when you're investing in these positions. Or if you're going to invest now, just understand the environment that you're investing in and understand it could probably be a little bit more punitive for a prolonged period than you might be comfortable with.
So, Shannon, I know you want to say something, but can I ask you, do you see any parallels to the healthcare trade last year? It started off very slow last year. It accelerated at the end of the year, and it's very similar to cybersecurity. You're going to need it. It's going to generate revenue at some point just with the direction that everything's going. Any parallels there and the potential for a catch-up trade on the back end of this year when it comes to cyber?
There could be. I think what it comes down to, though, Frank, if you're an S&P 500 CEO or CFO in the earnings over the next couple of quarters, are you going to amplify your cyber spending or are you going to amplify your AI spending? And I think it comes down to there's a kind of a narrative around that. From an enterprise perspective, companies could still be accelerating or continuing their cyber spend, but they're not going to be talking about it in this environment. They're going to be trying to put their flag in the ground on what they're doing in AI because that is what has been rewarded by markets over the last couple of years.
Let's move on to financials. Take a look at the action there. We got some earnings reports earlier today. Some kind of, I guess, mixed reaction to what we heard from there. Kerry, you're nodding as I say kind of mixed reaction. What was your take on the earnings? Was there one bank in particular that stuck out in your mind as one that made you feel very bullish about the financial space today?
Oh, financials had such a strong year last year. I think it's hard to be very bullish. When you looked at strategists' opinions of what sectors they are very bullish about for 2026, I think financials might have been number one for the majority of firms who commented, and that makes me nervous. They had a good year. Everybody knows there's going to be more deals. Everyone knows with valuations and the need, I think, for some of the venture capital firms to take some money off the table and try to really bounce the IPO market. It's going to be good. I just don't know that I would rush into the banks right now until we see, they get a little bit more of a pullback, honestly.
Well, I said mixed because we're looking at Bank of America beats on the top and bottom line. You're looking at Citi beats on the top and bottom line. Wells Fargo, there were some misses, but when you look at the analyst reports, a lot of them were very positive about some of the results. Specifically when it came to investment banking was one area that we saw some bright spots. Steve, I'm going to come over to you. What's your view on financials right now? Is this still an area, a cyclical area that you're feeling confidence in? Is this maybe one part of the market that does need the rate cuts to come in?
I'm still positive on them. Of course, my exposure is in Goldman, and it's one of my largest positions because of how it's moved since I've owned it. I don't see anything changing it. I do see rates that are at least going to hold steady for a while. I don't know how much they're going to come down. Maybe we get another cut this year, maybe two. But I also believe that there's such a pipeline of transactions to do, and you'll need a cooperative market to do it. But that's just going to generate quite a bit of revenue for the banks. So I continue to be positive on them. Frankly, I'm not unhappy to see them come down post-earnings. It's a typical event post-earnings, but because it got a little frothy there. So I'm still there. I have no interest in selling any part of Goldman.
So kind of going full circle, last year volatility really helped the banks. It looks like we're on pace for more volatility this year. Is that a good setup for the banks going forward? I mean, with just so many issues, the SCOTUS ruling on tariffs, what's going on in Iran, what's going on in Venezuela, what could be going on with the Fed, not only Jay Powell, but there's also a Lisa Cook ruling that we're waiting on. I mean, there seems to be a lot of issues that could create volatility and give a boost to the wealth management business of a lot of these firms.
Well, let's hear from Goldman Sachs and Morgan Stanley. I think Goldman Sachs is reporting tomorrow morning, as is Morgan Stanley. They're the best at what you're describing. I also think it benefits the exchanges tremendously. I talk about that frequently. And whether it's the CME, whether it's ICE, whether it's Interactive Brokers or Charles Schwab, they are all in bullish trends and benefiting from the type of environment that we're talking about. And I don't think that environment's going to change. I think the volatility is actually going to elevate even more. So you probably want to enter CME into the conversation.
I want to add one more name in there, Robinhood. That's one that you own. Is that an area of financials that you think you want to drift into and maybe away from either the big banks or the regional banks?
Well, I don't think I think it's different in terms of you don't want to say, okay, I don't want to own a money center bank. I want to own Robinhood. I think you're grouping Robinhood in the names that I mentioned as it relates to the exchanges, but you're also going to get the clear benefit from cryptocurrencies lifting, and that's what's happening early on. Robinhood is not specifically tethered to cryptocurrencies, and they've really brought in a very strong bench of intellectual capital to diversify the business model, and they've excelled at that over the last 18 months, and they're being rewarded for it. So I think it's a little bit more. I think they stand right up there with the other exchanges, so I left that out in my commentary. Thank you for mentioning it.
Don't want to paint with too broad of a brush. Point taken. Weiss, you actually bought the GLD Gold ETF last week. Obviously, we all know about gold's rally, so you're buying gold pretty close to a high. Why buy here? What are you saying?
Because I think it goes higher. That's why I bought it.
I mean, what's the
it has gone higher since you bought it.
I was right. It's actually right for a change.
In all fairness.
No, look, I had raised some cash last year, at the end of the year, and I wanted a place to put it. I thought it was a reasonable hedge, frankly. And sure, I never liked buying anything at the highs, even though I read Joe's book, Buy High and Sell Higher, which I recommend to everybody. But that's why I think it goes up, because there's a lot of nervousness in the market, in the world overall, and this is a good place to hang out.
All right, we're looking at the GLD today. It's up over 0.5%. And welcome back to Halftime. Let's get to some stocks that are on the move. Let's start with Netflix preparing an all-cash offer for Warner Brothers, allowing shareholders to approve the bid on a faster timeline. Netflix shares pulling back. Why is she own this one?
Yeah, look, I think the stock's down today based on the market overall. In fact, if you do it for cash, you're removing the arbitrage. And I'm not sure there's a big arbitrage play here anyway, because of the length of time it's going to take for approval in Europe and in the U.S., which is up for grabs at this point. So I prefer they don't buy them for all this cash. I prefer they put into content and let Paramount sink under the debt load. But that's not the case. But I'm holding it. I do debate whether I should exit or not, just because I think it's going to be dead money, not because I doubt the fundamentals.
Kara, you had a thought on this one?
No, I just wanted to say, this dates me, of course. I followed the entertainment industry in the mid-'80s to the mid-'90s before I did biotech, and Warner Brothers was the subject of many acquisitions and mergers, none of which worked out. If Netflix is buying this for $85 billion or whatever the price is, because if it's library and because it's a studio already. The library could take $85 billion at 5%. $4 billion is going to buy them whatever content they need from the library to show to their viewers per year. I don't really understand this deal.
I agree 100%. I don't get it.
Joe, you're a shareholder. Are you in favor of this? Do you like the idea that they're going straight to cash?
I really haven't spoken to many people who are in favor of it, and that's perfectly stated. I agree with everything that Carrie said, and Stephen agrees as well. At the end of the month, we rebalance the ETF. Up until then, personally, I have to maintain the position. I can't get out. I said last week, if I had the ability to get out, I would.
All right. And we are back. Uber currently on track to snap a 3-week winning streak. Taking a look at shares, they're down almost just about 1/3 of 1%. Joe, you own this one in the Joe T. Weiss, you've been trimming recently. Joe, why don't you go first? Your view on this?
I sold it personally. I think the stock is just kind of in a sideways range. It's been trading between 80 and 100. It goes down to the floor at 80. It goes up to the ceiling at 100. It's been that way for the better part of the last several months. The story for me personally has been about an improving balance sheet, the free cash flow generation, the diversification that the company has executed on going into delivery. Now we need to hear what the next story is going to be for the company in 26 and 27 before I think it makes a sustained move above 100.
And robo-taxis are getting more competitive. They just came out a statement from Uber that if you want to, you can ride more Waymos in Austin today and book them through the Uber app. So that's good for Uber. As you can see, it's not having an impact on the stock. It's pretty well known out there. I just think it's been dead money. It's going to be dead money, and I've got other places to put it. So it's likely I'll probably sell in the next few weeks. I was close to selling before, but saw this momentum, so I held on for a little bit. But it's one, like Netflix, should have pulled the trigger on much higher. Woulda, coulda, shoulda account. When the deals were announced, when the deal was announced.
All right, we got to move on. And we are back. By the way, markets at session lows. You see the Dow down about 0.5% right now. It's also time for final trades. Steve Weiss, you're up first.
I'm saying with GLD, given my market view.
Shannon.
Oh, that was quick. I'm going to go with materials. You talk about global industrial inflection and underexposure in most growth portfolios. Here's an option for that.
Carrie.
CNX, it's a natural gas producer. Natural gas prices have gone up 10% over the last year, finally, and this is a very inexpensive way to play it.
Joe T.
Asset management, exchanges, wealth management. Raymond James is one of the names that I think will benefit and have strong tailwinds in 2026 from it. Volatility is not going away.
All right, one more look at the markets before we let you go. As we just mentioned, hitting session lows. We're talking about the major indexes right now. The Nasdaq down about 1.5%. The S&P down 1%. The Dow down just about 0.5%. The Russell pretty close to flat, but we saw it kind of wiggle back and forth between barely positive and barely negative throughout the hour. That does it for us.
Hello, everybody. Welcome to Blue Cloud Trading. I'm George. It's Wednesday, January 14th, and it's 1:52 p.m. Eastern Time as I'm recording this video. Now, what we're going to do is we just saw some clips from CNBC, right? And we're going to take a look at a number of the stocks and ETFs that they talked about on the shows. And so, but before we do that, what we need to do is take a look at the overall market. Let's see what's going on. The Dow Jones is down today, 0.35%. NASDAQ is down 1.41%. You can see a gap down here. Price dropped. S&P 500 is down 0.87%. Same thing. It does seem like price is stabilizing, though. Okay, since 11 a.m., you can see that price has found seems to have found a little bit of a bottom here for the NASDAQ and the S&P 500. And may potentially be moving up slightly right now. And the Russell 2000 is up just 0.11%. All right. Now, one thing I will mention is that, still, if we consider what's happening with the overall market, there's still about 60% of the stocks are above this 50-day moving average and about 55% above the 200-day. It's about 72.3% of stocks are still experiencing new highs versus new lows. That's good. Let's take a look at the heat map real quick. These are the individual stocks within the S&P 500, right? And you can see that a lot of the stocks are down, like Microsoft is down, NVIDIA, Broadcom, Apple, Oracle, Amazon, Tesla, Meta. Google's down slightly, 0.24%. What stocks are doing well today? Energy stocks. Utilities are doing okay. Consumer defensive stocks are doing well. And so, yeah. And the healthcare stocks are kind of mixed, but pretty good. Now, let's also take a look at the groups. And here we can see the individual performance for the sectors. And you can see that, yeah, energy up 2.3%. And if you look at the overall sector for consumer defensive, that's up 1.02. Basic materials is up 0.9%. But technology down 1.94%. The 1 week performance, technology is down 1.99%. Energy is the leader, and consumer defensive is not that far away. Basic materials also doing pretty good. So is industrials and utilities. So let's go ahead and start with looking at the stocks. All right, we're going to look at the index ETFs like the Dow, the Russell, the Euro stocks, the SPY, the QQQ, and the VIX, which is spiking today a little bit, 11.5% right now. We're going to also look at about 17 stocks and ETFs. Not all the things that were discussed, but a good portion of the things that were talked about. What I've done is I've already previewed these. I have selected the strongest ones at the top here, and I've given them a blue flag. If they pass specific criteria, I'll get into that in a second. Because basically I'm more of a technical guy. I look at the technicals, and that helps me to identify the strongest stocks and ETFs. Now, the other thing I like to look at, well, you can see we'll look at Mag 7, some of these like Tesla, Apple, Meta, they're all down today. We will also look at approximately 7 stocks and ETFs here from our members. And if you want to become a member, there'll be some information in the description section, so check that out of this video. There are some perks to being a member. And don't forget to like, subscribe if you like what you're seeing. All right, so before we get started, there are always new people coming to this channel, folks. I mean, just this last week, we added another 200 subscribers. So let me just give you all a brief overview of this fantastic indicator, which of course I love. It's called the Ichimoku indicator. And it's comprised of 5 lines. Okay, so it starts with the green line there, which is the midpoint of the last 9 periods. They call this the Tenkan-sen. Then you've got the Kijun-sen, midpoint of the last 26 periods. We want that green line above the red line. Very important. Then you've got Chiku span or lagging span. And this is basically the current price right here, projected 26 periods into the past. In this case, we're looking at a weekly chart, so 26 weeks into the past. And what basically we want to see is that white line above the candle that shows bullishness. If it's under, that's negative. Then you have the actual cloud itself. Now, how does that derive? How do they even pop this up? It is based on a mathematical formula. Now, you've got these two moving averages. If you look at the midpoint right there, and you project that 26 periods into the future, that's where you will find it, the Senko span A, part of the cloud. And then the Senko span B is derived by taking the midpoint of the last 52 periods. And then instead of projecting it under the candle, it's projected 26 periods into the future. And that's what comprises the cloud itself. And we want price to be above these moving averages, the cloud, and we want that Chiku span above price. Very simple. And by the way, Ichimoku stands for at a glance. So at a glance, you can quickly identify whether or not you're in a strong uptrend. And it's a pretty comprehensive indicator because it just, you can quickly skip through different stocks and ETFs and identify whether you even want to consider, right? Personally, I'm looking for stocks that are showing strength, not weakness. And this is going to help you identify those very quickly. So the Dow looks great on the weekly chart because it's hitting all that criteria that we just talked about, right? What does it look like on the daily chart? Same thing. Even though price is down 0.35% today, prices here is above the moving averages in the cloud. Now it is, you can see here, consolidating, right? So price has been stuck in the little box here, but technically speaking, we're still in a strong uptrend overall. Things have not broken down here. Russell 2000, same situation, right? There's a daily chart, up 0.18%. Here's the weekly chart. Pretty strong. I like what I'm seeing. What about FEZ, the Euro stocks? On the weekly chart, looks good. And on the daily chart, looks good too. Even though it's down 0.39%, it's normal for price to pull back a little bit. It did over here. It did over here. It did over here. Okay. Usually the cloud acts as a nice level of support, and price tends to either stall at the bottom of the cloud or at the top of the cloud and then bounce off of it. Okay. So FEZ still looks good. I like it. I also use a secondary indicator here. I'm looking for the directional movement index. I've got it at a setting of 9. The green line to be above the red line. That's also telling us that the direction is to the upside. As you can see here, when we had the crossover, if you go straight up, you'll notice it led to that nice move up. And we're still in a nice, strong uptrend for FEZ. Now, I gave these 3 ETFs a blue flag here, and that's because it passed on both the weekly time frame and the daily. If something goes off, okay, the ETF will lose its status as a blue. And so let's look at the SPY, for example, which actually dropped today on the daily chart under the Tenkan-sen. Now, where is it now? 688.07. Okay, it's actually moving up. Let's look at so when I looked at this earlier, we were under. Okay, so I took the flag off, but now it seems to be moving up. Let's look at the 3-minute chart. It's 2:02 p.m. And you can see that the S&P 500, like I said earlier, it seems to have found a little bit of a bottom down here right now. So that's a good sign. You can see that on the 3-minute, price is stalling here. And it looks like it's breaking through that high right there. So we might see it move up. You can see that the directional movement index, at least from the short term for today, right, is looking pretty like it might actually break through that cloud soon. We'll see. So you know what? We'll give it the blue flag based on that, because on the weekly chart, it still does look good. It's still, even though it's consolidating, it still looks pretty good. What about the Qs though? On the Qs, we've got the weekly chart, and that too is above the moving averages. But what I don't like about this one is it's been pulling back for multiple weeks here and just building this little triangle, a symmetrical triangle. It's consolidation, and that's indecision. That's what that tells me. And so when price finally breaks either to the upside, and then that can lead to a nice expansion to the upside, or if it breaks under that trend line, that could lead to a pullback, a further pullback, maybe even as far down as the cloud itself. All right. We are due for a correction. So, and then maybe we'll find a bounce. Who knows? Or it could break through the cloud. The good news is the charts are going to give us insights on whether or not we should be in the stock or not, or ETF. Here's the daily chart. Now this one does not maintain its blue flag. The QQQ, as you can see here, price looks like it's more than likely to close under the Tenkan today because it's down 1.56%. It's already 2 o'clock. There's only a couple more hours until the end of the trading day. We would need to see some, a lot of a big push here to the upside, and I'm not seeing it. Now the VIX, as you can see, yesterday I talked about the VIX, how I was concerned about the fact that the candle here closed above the Kijun-sen, the 26 period. That's usually a bad signal. And we also have a crossover here. You see the green line above the red line. Now the VIX is the inverse of what we want to see. We want the VIX to be dropping. We don't want to see this moving up. Why? Because that's the volatility, market volatility. This represents fear in the markets. And yeah, it's up 10.5%. And from yesterday's low here, it's already up 19.3%. It's a pretty big jump if you think about it. So, yeah, not too crazy about that for the market. We'll see what happens soon enough, though. And now, I also reviewed, like I said, 17 stocks and ETFs from the shows. And let's look at those. I've got the ones at the top here highlighted with a blue flag. Okay, so let's go ahead and get started with GLD Gold ETF, which is up 1.14%. And obviously that looks pretty bullish on the daily chart, and it looks very bullish on the weekly chart. It's in a nice strong uptrend. IYM, Basic Materials, also in a strong uptrend on the weekly chart and daily. Now it's getting a little bit extended at these levels. I'd be a little bit concerned about that. The fact that it's that far away from these two moving averages, which is the equilibrium zone, that's a little bit concerning. Why? Because price tends to come back to reality, right? It doesn't stay extended for that long before it's at some point has at least a short little pullback. What happens eventually is there aren't as many buyers as there are sellers, and once that group starts to decline, and you can see that, by the way, you can see that if you just look down below here at the volume. So let me show you, folks. See the volume here? If you go straight up, the volume was pretty strong. And then as price moved up, the volume bars got smaller. So you can see that right there. If you draw a little trend line, okay, price is moving up. What else is happening? Where you had like relatively large candles here. Notice how the candles are getting smaller and smaller. So the moves aren't as big. So just keep that in mind. Maybe now is a good time to take some profits in some of these basic material stocks, is what I'm saying. All right, let's look at KBE. Now, the Spider S&P Bank ETF has pulled back, and now we're getting a buy signal, actually, because price is getting back above the Tenkan-sen and Kijun-sen. So that's a good sign right there. I like what I'm seeing here. The directional movement index isn't very bullish yet. What about the weekly chart? On the weekly chart, it looks it's just up 0.58%, and yeah, it's kind of stuck in this little range here. Nothing major, but it technically we're hitting all the check marks for the Ichimoku on both the daily and weekly time frame. What about OIH ETF, the Van Eck Vectors Oil Services ETF? That one looks very bullish to me. It's up 2.44%. Notice how the consolidation that was occurring here has been broken, and now there's an expansion, all right? And you'll also notice that the ADX here, the white line, is moving up. That represents momentum is increasing. So I like that. Again, I've reviewed these on the weekly chart. Here's the weekly chart, also looking pretty bullish. XLI on the weekly looks great, all right? Where it was consolidating for a very long time here, for multiple weeks. These last few weeks, it's starting to expand. So I like XLI. Here's the daily chart. Today it was down 0.21%, but overall I like the chart. XLV, we're getting a nice little pop up here, up 0.29% for healthcare. Not a lot of volume. Okay, so it's not like it's something really that's taking off quite yet, but I like the technicals on the daily and on the weekly chart, still holding up. We have a bullish cloud. Remember, you want that Senkou span A to be above Senkou span B. Over here, you'll notice that it was under. And so because this always projects in the future, right? For example, if you go when this crossed under, the single span A crossed under right here, if you went back 26 periods ago, you could have got that nice little warning, essentially, like, hey, things are not looking so great. And over here, you can see that when the crossover turned bullish, if you go back 26 periods, you can see how price has been moving up now. So it's, again, very visual. And for those of you who don't want to be focused so much on the fundamentals, because the fundamentals, if you're just looking at fundamentals, you can have perfect fundamentals in a company and the stock still drops significantly. I'll show you some examples of that in a little bit. BUG, whoops, sorry about that. That's the cybersecurity ETF that they were talking about. Not looking good on the weekly chart. It's been declining for multiple weeks here. In fact, we have a series of lower highs and lower lows, which are not indicative of strength, okay? Do you see that right there? So you get a lower high here from the prior one. You have a lower low here from the prior low and the prior low before that. So you're in a downward channel, essentially. So stay out of that. It's as simple as that. And that's why it doesn't have a blue flag. CNX is under the Tenkinson. I would stay out of it for now. On the weekly chart, it doesn't look terrible here because it looks like we're getting a bullish harami pattern. This pattern here consists of two candles. So you've got the large red candle, and then you have a smaller bullish candle right after it. And I'll show you guys what that looks like on our cheat sheet. We have a cheat sheet on my Twitter page here on x.com. If you want to get access to it, look for @BlueCloudTrader. Look for me there. You'll see this page. You scroll down. Consider following me too. And then over here, you'll see posts, replies, highlights. Click on the highlights tab. And then scroll down a little more. And there's the candle pattern reference sheet. And if you click on it, make it a little bigger, a little brighter, we can find some of those candle patterns. Okay, candle patterns. And this particular one is a bullish one that we just looked at. Let me just show you again. So this is the bullish harami that you're looking at, the large red candle followed by the small bullish one. If you want to see what that looks like, here on this pattern reference sheet, let me go ahead and show you. It's this one right here. So there's the big, large red candle followed by the small one. And what's interesting is harami stands for pregnant. So the Japanese use this candle and that shows bullishness, basically. Now there's an opposite to that, of course, and that's the bearish harami. On this side over here, you'll see all the bearish patterns. And that's when you have a bullish candle followed by a negative red little candle. All right, typically if you see this at the top of a move, like after price has moved up, that's very bearish. I would strongly recommend that you guys check this out and learn about how to understand the candles. Again, I was talking about open price, close price, highs and lows of each day or week, whatever candle you're looking at. All right, let's get back. So CNX looks good, but it's still under the Tenkinson, so I would skip it based on that. And what is the weekly? That's the weekly candle. No, I'm sorry, weekly chart. What does the daily look like? Yeah, it's under the cloud, so I'd skip this one altogether. Robinhood is under the cloud in the daily chart, so skip that one. IBIT is under the cloud, but it is showing some strength recently. Bitcoin up 2.73%. After this long decline here. So from the highs here, it was priced at 71.83. It dropped all the way down to these lows here back in November 21st, down to $46.86, approximately 17.5% drop. And now since this point here, it's actually moved up 17.87. So that's interesting, right? It's entering the cloud, so it's in the beginning stages of hopefully turning bullish again. I can see a nice pattern that's just formed here with Bitcoin. So if you look at this high here, do you see how it was finding resistance here and here? So that has been broken. That actually got broke today. And then you've got a series of higher lows. See, that low is higher than the prior one, right? So there you've got essentially an ascending, they call this an ascending triangle pattern. Okay, that's a bullish pattern. And when price breaks through it, that's very bullish. And you can see the ADX is moving up, the green line is moving up, the red line is moving down. That's what you want to see with the directional movement index. I like it. Now it's going to find some. It's going to probably find some resistance right around these levels here, the top of the cloud and the 200-day. That's that dotted yellow line right there. Now, how far are we from those levels? We're about 6.3% away. So, it could stall and then pull back some more, or maybe more money starts coming back into Bitcoin and breaks through the cloud again. We'll see what happens there. Now, the weekly chart, here it is. It's inside the cloud. Notice how the weekly it stopped it dead in its tracks, right? So price never on the weekly time frame closed under the cloud, and that's a very bullish situation for Bitcoin. Again, you're going to have, Bitcoin is very volatile. All right, it's more of a buy and hold type strategy to have a small percentage of, your portfolio in Bitcoin, like I don't know, 3%, 4%, something like that. Just if you want to be exposed, have a small exposure to it. JP Morgan, on the other hand, is where it was moving strongly up on the weekly chart. You can see it's now under the Tengen-sen and Kijun-sen on the weekly chart, and on the daily chart, it's pulled back and it seems to be finding some support at the cloud. So tomorrow it's possible that we might see a pop up. That's a bullish spinning top after a move down. That's very bullish, but I wouldn't be adding position here because it's still under the moving averages. Morgan Stanley also dropping for 2 days in a row. This one, I'm not sure what's going to happen here. Let's look at the 5-minute on this. It seems to have stalled. It seems to have maybe on the 5-minute chart, we are developing a double bottom, okay? And but it still hasn't taken out this high here and has not gotten above the cloud on the 5 minutes. So no, on Morgan Stanley. How about Netflix? That one is still declining here on the 5. Here's a daily chart. Very, very embedded decline, lower highs, lower lows, downward channel. This can last a lot longer. Wait for money to start coming back into it, and you'll see it on the chart when price finally starts showing some strength. Typically, you want to wait until price gets above the cloud. And here's a weekly chart. You can see that it's been declining for multiple weeks here. It's not good, not good. And the ADX, notice how the ADX is moving up and the red line is above the green line. That's also very negative. OKTA, Okta Inc., Class A, technology sector, software infrastructure, is showing a little bit of strength recently, but it's still under the cloud, so I'd skip that one. That's the weekly chart that you're looking at. RJF, this was, I think, Joe Terranova's final trade. It's been showing some strength, but the Tengen-sen is under the Kijun-sen, so we had that negativity right there on the weekly. What does the daily look like? The daily looks more bullish. So this has some potential. I personally like to wait. I look for perfection, and I'm not seeing perfection here because of this, and so that would keep me out of it. Uber is under the moving averages, so I'd stay out of that one. On that was on the weekly chart. XLF is finding some support at the Tengen-sen and Kijun-sen on the weekly chart, but on the daily, it's broken down. Right, the financials have not been showing a lot of strength, and you can see it here clearly on the charts. The red line is moving up, the green line is moving down, ADX is moving up, and it's also basically taken out this low. That's not good. That happened yesterday with that big red candle. And we do have a spinning top here, and that maybe price again might be stalling here. Let's look at the 5-minute. There it is. You can see it's moving up slightly, but that's not enough information or data for me to get convinced that, oh, this is the end of the pullback here for financials. Therefore, I wouldn't be investing in that right now. Then you get some of the Mag 7s, not all of them, okay? Like Tesla, which is still dropping down 2.33%. You've got a negative crossover that happened here. I'd stay out of Tesla for now. Apple is also under the cloud right now. Okay, bearishness. Meta is under the cloud as well. That's not good. Lower highs, lower lows. Microsoft, same thing. In fact, it looks even more weak today than it did yesterday. And I haven't been recommending these stocks for a while now. You can see that it broke through today under that low. Okay, a continued down decline, in my opinion. And again, I said earlier, like, you can find companies that have fantastic fundamentals. Like look at the profit margin on Microsoft, 35.7%. Sales growth, 13.85%. Price to earnings growth is 1.94, which is pretty good. you know, you could find these stocks and yet price can still continue to drop. So it's about markets. There is such a thing as market timing. And in my opinion, this is where the technicals come into play. If you use both, if you choose stocks that are strong on both, with positive fundamentals and technicals, guess what? You're going to be on the right side of the trade. You don't have to hold the losers for too long, for an extended period of time. Sometimes, as long as as long as the stocks are holding above levels that for your expectations, right? So like Microsoft, for example, if you look at the weekly chart, it's still above the cloud. All right. So this still has a potential here to bounce at this level, right? So, but would I be adding a new position? And the answer is no. This is not the right time to be adding, is what I'm saying. You could certainly hold it and wait to see if price can hold up here on the weekly chart. And remember, you can also choose which time frames you want to trade on. Some people like the day trade and they're looking at a 1 minute chart. Okay. Other people are looking at the daily, other people the weekly, other people the monthly chart. And if you look at a monthly chart of Microsoft, it's still relatively strong. It's pausing right here at the Kijinsen. All right. So it's all about, what time frame you like to trade, essentially. Amazon is still moving up, even though it's down 2.01%. That's the weekly chart that you're looking at, right? But if you look closely, right, let's look at this. Notice how the Tenkan-sen, the faster moving average, crossed under the red line. That's negative as far as the Ichimoku indicator is concerned. What else? On the daily chart, it's pulled back. There's a good chance that this one could bounce here at this point, but I wouldn't be adding at this point personally. Now we've got some of our members' requests. Let's run through these. And XYLD, Global X Funds, is an ETF that looks great here on the daily chart and on the weekly chart. It has notice how it says beta 0.42%. That means that it doesn't move. It moves about half the movement of the S&P 500 on average, or less actually. That's why it's only down 0.02%. So if you want to park your money in something that doesn't move a whole lot and isn't super ultra volatile, then this is something that you could consider. Over here, there was a candle that dropped quite a bit, but it looked like really like a big drop. That was a 7% drop, but it's not typical for this stock, right? And then we had this big candle that moved up approximately 8 or almost 9%, and then that led to this big move. So XYLD, I like it here on the weekly because it also broke above the 200-day, and on the daily chart, it still looks pretty good. MP, Materials Corporation. MP is the ticker symbol. Let's look at the weekly chart first. It's still above the cloud. It seems to be moving up these last 3 weeks. It's still above the Tenkan-sen, but it's under the Kijinsen still. What about the daily chart? It's inside the cloud. So it's showing some strength here. And it looks like it also bounced off that 200-day moving average. So that's a good sign. I wouldn't be adding new positions here, but I would be probably holding it and see if it can continue its move up. Now, the profit margin here is negative 50.5%. That's another thing that you have to contend with, is whether or not you want to be adding positions in stocks where the profit margins are still negative, right? Operating cash flow is negative as well. Okay, next one, CLSK, CleanSpark. This one is still under the cloud, all right? It looks like it has maybe found a double bottom right there. In fact, there's a slight little move up here. So you have a higher low from the prior low. So that's a good sign. It has not taken out this high here, and we're still stalling right there at the cloud. See how price just dropped a little bit, building a little bit of a spinning top. That's a reversal candle. Here's a 5-minute chart. So there's a move up, and it's been dropping into the cloud. Yeah, not something I would be jumping into here. It's not the proper time to get in. We still have a bearish cloud here in the daily chart, but it is showing a little bit of strength recently since the lows here of December 31st. Costco on the daily chart has moved up and hit that 200-day, and then it got rejected a little bit today, actually. So let's look at that on the 5-minute. Here's the 5-minute chart. And yeah, it's just here we are on the 14th, and we see that big move up. It dropped. It's now kind of stalling a little bit. The daily chart, again, we can see the cloud itself turning bullish. And again, it's stalling right at that 200. Now, in the weekly chart, we're still inside the cloud. So again, Costco is not, this is not the proper time to get in. You'll also notice that we've taken out these lows here, right? So that low has been taken out. So we have a lower low from this low, and then a series of lower highs here, right? So there's the lower high from the prior one, and it's in the downward channel. Although it has been broken. So like if you look at this long trend line here, let me go ahead and draw that out for you. From this high, if we just draw it across like so, yesterday it broke that trend line, and now it's moving up, but it's still inside the cloud, so I would not be getting in here yet. JEPQ, which is JP Morgan Nasdaq Equity Premium Income ETF, has been in a consolidation here for multiple weeks. It's just kind of stagnant, not much happening here. It's still above the Tengen-sen, it's still above the Kijun-sen on the weekly chart, so that is fine. There's nothing negative here. I'm not crazy about the fact that the negative DI is above the positive DI, but it is just, like I said, stagnant. And on the daily chart, today it pulled back under the 9 period. It's down 1.1%. But overall, it's, you know, again, it's just like, just moving sideways, really. OMAH, Vista Shares Target 15 Berkshire Select Income ETF, under the cloud on the daily chart. And so right here is not the best time to be obviously adding any new positions. On the weekly chart, it's also under the cloud, so not something I would get into at this point. It's maybe eventually it will show some strength, but right now is not the time. What about URI, United Rentals Inc.? The rental, this is in the industrial sector, rental and leasing services. We have a negative crossover here, but price has been moving up. We do have a red spinning top, down 1.68% on the weekly chart today. How about the daily chart? Yeah, so it's above the cloud. We have a future bullish cloud that's bullish. Chiku span here is above price, but it is pulling back currently. And we don't have perfection here on the weekly with that negative crossover, so I'd hold off on URI. And guys, that's going to do it for this video. I appreciate all of you for watching. And remember, if you want to find out about becoming a member, you can go to my homepage here, Blue Cloud Trading. Right next to the subscribe button, and it is free to subscribe, is a join button. You just click on that. And here's what you do. You just click here. A new little box will pop up. There'll be 3 different levels here. Blue Cloud Supporter. You'd be helping to support this channel so I can keep bringing these videos to you. And I appreciate that. And you can request a stock or ETF be analyzed on the show, like the ones I just showed you guys. Blue Cloud Trader is the next level up. Under this level, you'll get access to the exclusive member-only videos that I do. Each weekend, I go over my entire portfolio. I share anywhere between 20 to 30 stocks, new stock ideas for the upcoming week. Blue Cloud Legend, the next level up. Under this one, you get all those perks, plus some recorded day trading videos that I have, as well as daily trade, okay, updates. So today, for example, before the market closes, like earlier today, I posted a post with all my trades. Okay, so you can see a sample of that if you click on posts. There'll be a sample, like an older one that you can see. But if you want to get them up to date daily, Monday through Friday, become a Legend level member. It's $49.99 a month, and it's $24.99 for Blue Cloud Trader, and it's Blue Cloud Supporters $4.99. Guys, thanks for watching. If you like the software that I use, TC2000, check out my affiliate link for a $25 coupon. You go here, click on 9 more links. And then once you're on this page, you can read about my channel, scroll down a little bit. All right, there's a whole bunch of links you can check out. But this is the link for the $25 coupon right here. Click on that. It's the 3rd one down. Enter your email here. You can download the software for Windows, or if you have a Mac, you can do it from here. And like I said, you'll get a $25 coupon as long as you haven't used the service in the last 12 months. And you can find out about pricing here. They have 3 different packages, right? Here's the monthly prices. And depending on how in depth you want to be with your charts, you pick the one that meets your criteria. And you can reduce the price each month by paying for it up front. Like, you can bring it down by paying once every 2 years. If you go to by annual, you can see that it drops the price, right? So, guys, thanks again. I will catch you all in the next video.